Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Monday, October 3rd. Stocks on Wall Street are likely to kick off the fourth quarter the same way they finished the third, with losses. The Dow Industrials have dropped 12% over the past 3 months, making it the worst quarter since the height of the financial crisis nearly 3 years ago. This time, the negative sentiment is being created not by problems on the balance sheets of private banks, but by concerns about public debt. Those concerns are growing once again this morning, after Greece said it will miss its deficit target for the year. The country had agreed to cut its deficit to 7.6% of GDP in order to get its next round of bailout funds from international lenders. But now, Greece says it will only be able to achieve a deficit of 8.5% of GDP this year and 6.8% next year, above the 6.5% target. In order to reach its goals, Greece agreed to another $8.8 billion in austerity measures, according to the Wall Street Journal. But the report is raising doubts about the country's future ahead of a meeting of Eurozone finance ministers later today.
A report on manufacturing in the Eurozone is also weighing on sentiment. Market Economics said the region's manufacturing industry contracted for the second month in a row in September and reached its lowest level in more than 2 years. That report and the news out of Greece are driving the major European markets sharply lower. Frankfurt's DAX index and the CAC 40 in Paris are both down about 2.5%. But it's not just the Eurozone economy that's struggling. An official from the International Monetary Fund said all of the world's advanced economies are likely to remain fragile for several years as they address their debt burdens. Officially, the IMF expects global growth to slow to about 4% this year and next, from 5% in 2010. But even those estimates may be optimistic.
The negative economic news from around the globe has investors once again searching for relative safety in the markets. And that trend is helping gold reclaim its status as a safe haven asset. After some steep recent declines, it's rebounding by about $40 today to around $1,660 an ounce. Silver is also solidly higher, now trading above $31 an ounce. The move toward safety is also helping long-term U.S. Treasuries. The yield on the benchmark 10-year note is dropping back below 1.9% as prices rise, and the dollar is maintaining its strength against other major currencies. But oil prices continue to fall amid concerns that slowing economic growth will cut into demand. Right now, crude is falling to around $78.50 a barrel.
On the corporate front, Yahoo may get a lot of attention today. It's jumping more than 5% in the pre-market, after the CEO of China's Alibaba Group said he might be interested in buying the company. Currently, Yahoo owns a 40% stake in Alibaba, but Chief Executive Jack Ma has previously tried to buy back that stake. Yahoo has been looking for a new CEO since its board fired CEO Carol Bartz about a month ago. Private equity firms such as Silver Lake Partners may also be interested in buying the company. We may see another big move in shares of Eastman Kodak today. It's jumping 30% after losing nearly 54% on Friday. The stock plunged on news that it had hired Jones Day, a group of lawyers that specialize in restructuring, including bankruptcy. And finally, keep an eye on the big automakers today. They'll be releasing their September domestic sales figures throughout the afternoon. General Motors is likely to post a gain of 19%, while Ford may have seen its sales increase by 11%. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.